Hey guys, it's Chris. Welcome back to my channel. Today's video, we're talking about the stock market up huge today, especially the NASDAQ. The tech and growth heavy companies are doing well, a huge bounce back. We're going to talk about whether this correction that we've been having, and it is a brutal correction. My account has been feeling it. I'm sure your account has been feeling it as well. We're going to talk about if it's over and what are 5 stocks that are looking really good here from a technical setup. We're going to talk about some that are potentially really high reward trades right now. For the past few months in the stock market need no introduction, of course. Inflation and interest rates going up in the bond market is what's driving a lot of the selling in growth stocks and a lot of money shifting to value stocks that are part of the reopening trade. A lot of those stocks already have really good income, and with inflation it's only going to increase even more. But we're going to put this into context in historical time frame and look at what the NASDAQ has done in the past and what we can expect potentially in the future. So I've said this before on my channel, when you go back to 2015 and 2016, that period of time was a time when inflation was also a really big scare in the market. Everyone was afraid that interest rates were going to go up and growth was going to die down and become less valuable. And you can see here on the NASDAQ that it traded in a relatively tight trading range for almost a year and a half. And you could see that the trading price action here is very similar in pattern to what we've been experiencing here in 2021. You had a very sharp decline, a somewhat of a double bottom, or a pretty big and quick reversal back to that all-time high, before then going back down. And it took a long time before the NASDAQ was able to make a new all-time high. Now that doesn't mean that every single growth stock is going to follow the pattern of the NASDAQ. The NASDAQ composite is made up of a lot of different stocks, whether it's the big cap growth stocks like Apple, Facebook, and then you have the much smaller companies in there as well. It doesn't necessarily mean that we're going to stay in this range forever, but I think that when you are planning your trades, if you are a trader, or just to prepare and plan ahead if you're a long-term investor, you need to be mentally prepared that the market may be stuck for a while. It's going to go up, it's going to go down. It could last for the rest of this year. But I personally know if you are a long-term investor, this will subside, and there are some great growth stocks right now on discount that in a year's time, 2 years' time, 5 years' time is going to be way higher. And people are not going to buy banks and materials and industrials forever. So the first stock to buy or watch on this list is going to be Apple, and this chart is going to be very important. You see, Apple makes up over 10% of the NASDAQ 100. It also is a very big part of the S&P 500. So if the whole market is going to go up, chances are it's going to need the likes of Apple to go up and a couple of other of those big cap tech stocks, right? So Apple in particular is very interesting here because you can see the 200-day moving average on Apple just got hit and it bounced off from there. It was around 125 thereabouts, and we're seeing some sort of movement back upwards, and potentially this could be a sign of a bottom, or at least in the short term, right? When you look at the Apple chart, if you zoom it out a couple of years out, you can see that this is a very key level, and Apple has not fallen below that level for a couple of years. And every single time Apple hit that level or slightly below it, it did not stay long below it, and it bounced very aggressively back up towards those highs. So if we are going to see some strength in the market, I would be watching Apple stock here. And they just reported, as with the other tech stocks, some very phenomenal numbers. Second one in this list on a similar vein is going to be Facebook stock. All right, Facebook, as I've said on my channel, I believe it is the most undervalued of all the big tech stocks. When you compare it on a PE basis as well as the growth, this company has been growing its revenues about 30% every single year, and that is much higher than a lot of the other big cap tech stocks. When you look at Microsoft, for example, or historically Apple, typically only has 10-15% revenue growth. So Facebook does double the growth. It also has much lower of a PE ratio. If you look at the forward PE here, which is estimate used based off of the next year's earnings, you can see that it's trading at a low 20s PE ratio, right? And historically, this is very low for Facebook, right? So on a technical basis, Facebook looks attractive because you could see it was trading in this range for almost about 8 months, I believe, right? Between $240 and the previous all-time high, which was $303. It broke out of that level after its earnings, and it shot up quite significantly towards 330, and now it has gone back down and actually bounced off of a level very close to that previous resistance of that previous all-time high, which is 303, and it bounced from there. So again, you could see that it has cemented that support level, and we can potentially see a continued move upwards for Facebook stock. Stock number 3 and stock number 4 on this list are very similar, so I'm going to do them together, and that is FUTU, FUTU, and TIGR, TIGR stock. FUTU stock and TIGR stock are Chinese brokerages. They also operate budding operations in the United States actually as well, and Southeast Asia. They have a lot of growth ahead of them. The past year was phenomenal. FUTU had over 200% revenue growth. TIGR had close to 150% revenue growth. And as far as net income, they did, 10 times what they did in 2019. So the growth is there. The profits are there as well. When you look at the forward PE ratios for these companies, are very, very attractive actually for the amount of growth that they have, around a forward PE ratio in the 30s. And when you look at it, right, a lot of people are saying tech is overvalued. You look at FUTU's estimates for 2021, and it is close to 100% growth. TIGR as well is also going to be very strong. It's going to maintain at some pretty high levels. And if they don't go up, these stocks, then, by the time next year, they're basically going to be value stocks at that point. And I think that's ridiculous. Another thing you want to note here is that FUTU is going to report their earnings next Wednesday in pre-market. So I expect there to be a lot of movement as well. Me being bullish on this stock, I do believe it's going to be very positive. All right, and it's coming off, both of them, a low base. So when you look at the FUTU chart here, you can see that FUTU traded to around 100, which was also its previous low back in around March, okay? And I see a really nice double bottom forming here. All right, cemented support here once again. And you look at TIGR stock too, the chart is very similar companies. And this one traded to around $14.20, which was again near a previous low. All right, so you can see that the bulls are stepping in to support the price here. And there is so much upside. Like the risk reward here, I think is unbelievable, right? FUTU, for example, you're getting around $100. After today, it's around 120, but still, the next sort of resistance here is that level around $150 per share, and then beyond that is $200 per share. And when it comes to TIGR, you have a stock that traded to 14. Just recently, it was at 21, 22, 23. So you have potentially 50% upside easily, I think, in either one of these stocks. So again, this is such a really great opportunity in my opinion. So you want to buy FUTU stock and TIGR stock, in my personal opinion. Do your own research, of course, but I do own large positions in both of these companies. And the last stock we're talking about here, stock number 5 to buy or watch, is going to be IPOE, all right? So this one I did a previous video on, so I'm not going to harp on it too much. But what I will say about IPOE, which is going to be changing to SOFI. This is a SPAC that is going to complete its merger at the end of this month. I think, that in itself is a great catalyst, especially if growth gets back into favor in Wall Street and they stop, kissing up on all the value stocks and, give some love to some of these growth names. I think that there could be some significant movement to come for IPOE. You look at the chart here, and you'll see that it is very similar to all of these other stocks, really, where it found a support. It's traded down to around $14 in the 14 range several times now throughout the past few months, and it has maintained that level and bounced every single time. If you want to look up the fundamentals, make sure you check out this video up here, and I talk all about that in very good detail and break it down for you. Easy to understand. With that being said, guys, hope you enjoyed this video. Those are 5 stocks to watch. 5 stocks to buy potentially, depending on your portfolio, of course. At the end of the day, everyone's different, but these are some stocks that are in my personal portfolio. Make sure to subscribe, guys, and until next time, my friends, stay well and invest responsibly.